Good evening, ladies and gentlemen. It is Friday, the 15th of September, 2023. Welcome to Hindsight episode whatever, where we learn to be a better trader. Really, I'm just here spitting out some thoughts about this trade for OZM today. I thought it'd be interesting because it gapped up nearly 200%. And I know a lot of people, when they see these kinds of trades, they don't want to buy into it. They don't want to trade it. They're like, it's gapped up too high. I don't want to be a part of it, yada, yada, yada. So here are some thoughts about why I wasn't too phased by the 200% gap up, and some thoughts about the actual trade itself and some oddities around how it traded as well. So first things first is at 3.2 cents, it was about 4 mil market cap. So gapping up, an extra 200% on top gives it about 12 mil market cap, around 9 cents. I haven't calculated it exactly, but that's roughly the market cap that it's got. That means shares on issue somewhere in the 120 mil range from memory. And yeah, so we got a gap up, a pretty significant gap up. We'll just look briefly at the daily chart here. There's some pivot points that stand out here. And that's really the only one once it opened up at 9 cents. I guess one could look at 6.8, but there's no way I'm touching this stock because obviously it's not shortable. There's no way I'm buying a stock at 6.8 cents when it opens at 9. There's just no chance of recovery from such a sell-off. And then we can see the only significant historical volume really was from April 2022, because April is just a massive pump month generally. So we can see it had a really, really nice move. And we're not really scared of any baggies up till about maybe 16 cents. You might have some historical sellers, but those people who bought in had plenty of opportunity to sell out on the following days as well. So less risk of baggies providing lots of supply. Obviously, there's still a risk there, but it's less and less likely the more time goes on. So what we have is a gap up to 9 cents, and this pivot point here, when a stock gaps up this hard and there's no real volumes to hold it down, it's not that concerning. So I didn't look at this and go, we're opening at resistance at 9 cents, this is going to be a problem. That didn't even cross my mind at all, because this was gapping up on pretty significant volume. I think the match volume was 900k if I'm right. I remember seeing that show up on the book. So we have 1.1 million volume, which is well beyond anything it's done before in recent history. So sort of don't care, because if it's opening up at 1.1 mil vol and it's substantially more than anything it's ever done in the last 12 months or so, then I just don't care. I don't care how much it gaps up. And the reason I don't care as well is because the market cap that it was at, sitting at around 12 mil, wasn't that big considering what was found. So we're going to take a look at that in a second. But first, we're going to take a look at the peak market cap. It sort of dipped into about 10 mil-ish, I think it was, maybe 11 mil, and rose up to about 16 mil, which I think is roughly the top end of this. I was complaining earlier that, wow, I thought this could get to 16, 17 mil, and it actually got there. I think I miscalculated the market cap, which was a bit of a problem. But for this one, I was always interested in buying this thing, no matter what. Not necessarily the match, because the match didn't look too crash hot, but the idea was buy the dip. And it's all about where the liquidity came in hot. And really, there was a bit of a reversal here. And once it started pumping into the 9s again, so it did a dip from 9.9 down to 8.3. And then there was just a surge in volumes, just market buys. And the plan was to get in here as it broke above the open price at 9.4 and just sort of mark it in. And depending on the volumes as well, you could really see it on the tape that things were turning around very quickly. So it was about getting in as quickly as possible and just lifting the offer. But unfortunately for the opening drive, I had issues with getting the stock pretty much for most of the morning. It was only when it came back down to around this 10-cent level, which we'll go over later, is where I started getting in. And we'll go through the fundamentals of this one, or the news announcement. Now this one has a bunch of keywords that are interesting. Firstly, lithium. So it's an acquisition of a lithium project. It's in Brazil. I don't have many thoughts about Brazil. Obviously there's what they call sovereign risk. It's not in Australia. It's not in a first world country. But I'm not so sure that Brazil is that bad. I don't recall any recent problems with Brazil. I don't recall, it's not like the the southern parts of Africa or anything like that, or Central Africa, the DRC or anything like that. It's nothing like that, I hope. But so far, no real issues that I recall about Brazil. And so there's no real issue about the location that immediately springs out. It's not like in Namibia or something like that. So what we have is spodumene grades of 7.36% lithium with an average spodumene grade of 6.94. That's obviously super, super high grade. What we got to take into account is that these are rock chips. So these are rock chips, and immediately one would think, yeah, that's kind of shitty, like who wants rock chips? This could still move if it was just surface rock chips, but my thoughts are that this is something different. This is actually rock chips inside a mine. And now I don't actually know if that makes too much of a difference, but from a retail trading perspective, other people may perceive that as better than just regular rock chips, because rock chips, just generally speaking, are garbage. But the rule of thumb is, well, what's moving at the moment? Well, as of today, it's really uranium that's moving and lithium. Lithium's just always hot on the ASX, and it still is, and it probably will be for a little while. So if anything's going to move on rock chips, it's not going to be gold, it's not going to be silver, it's not going to be tin, it's not going to be copper. It might be copper to some extent, but it has to be super high grade, like 30% or something like that. It's going to be lithium. Lithium rock chips are the ones that move in the spec end. It doesn't matter what. The word spodumene gets the market excited. And what we have here is super high grade of 6.94% average rock chips inside a mine. Now, to me, I don't recall seeing rock chips taken from mines very often. It's just not something that I see. I mean, I've seen it for gold stocks here and there once or twice, but I've never seen it for lithium that I can recall. Therefore, I don't really have any history to relate to this trade. But my immediate thought is, well, these are spodumene crystals that you're finding inside a mine. So the question becomes, how deep is this mine? So we scroll down and we can see here we got 430 meters of RL into 420 meters of RL. And at this point here is basically where they've dug up, chipped away at the walls of this mine and found really, really nice spodumene crystals. And that's about, what, less than 10 meters deep, so 420 to about, I don't know what that is, 426, so 6 meters deep roughly. It's 7 meters wide, and that's all the information that it has. So we got a shallow mine with rock chips of spodumene. Great, and super high grade. So to me, in my mind, I start thinking, right, well, what's the highest we've really got? What's the peak market cap that we've gotten for spodumene rock chips? Probably somewhere in this maybe low 20 mil market cap, but that's just during April. So one also has to factor that we're not in April. We're in one of the biggest dog markets for spec stocks in a long time. We recently had a pump the last few days. Can't remember what it was, SPL and something else. BM8, I think it was. But there was a nice big pump and rally, and the market sort of heated up a little bit, but we're still far away from a bullish spec market. To give you an idea, we got XEC. You can have a look at the emerging companies on the ASX, and you just see on this chart, it just explains it perfectly about what's going on in the microcap market. So for about a year and a half, we've just been stuck in this sideways range, and speckies, the XSO, the small lords, same thing, just stuck in a tight range, and we've been stuck there forever. So the speckies aren't really hot. So what we have is back to OZM. So piecing all this together, we've got low shares on issue. We have 7% spodumene, which is about as high as one can ever see in terms of rock chips. I don't think I've ever seen higher. It's taken inside of a shallow mine. That's like 5 to 7, maybe 8 meters deep. And it's a true width of about 7 meters. That's all we know. So for me, in my mind, I'm thinking minimum 16, 17 mil market cap, possibly reaching 20 at the top end because this market's pretty terrible. And that's really the trade. So the idea was always in Discord was, guys, I'm buying the dip on this thing. Like, I want the dip. I don't want the match because matching hasn't been great even for spec stocks. It's I want to buy the dip or the reversal of the dip. So I'm not too keen on matching and then risking this downside move. I'm just not interested in that. I'm not interested in adding on as it sells off, because how far does it sell off? Does the market even care? The market's pretty shitty at the moment, but for the spec end anyway. So I'm going to let it do its thing and then find a trade where it works. So you got like a tiny range here that exists, and that's really the only thing that sort of stood out. Very, very quick, tight range, but really it was about the buying that came in and looked quite nice, just everyone lifting the offer. So the plan was to get in on any sign of strength, and it showed up pretty early, pushed all the way to 12.5, which would have given it a good market cap. Let me have a quick look. We're looking at, I'm pretty sure it was 126 or 128 mil times 0.125. Yeah, you're looking at just shy of 16 mil market cap at the top end here, which would have been my bottom end target. So it got there, pulled back, and was chilling on VWAP. It was obviously 10 and 10.5 was VWAP, so it kind of just churned a little bit here. And I ended up getting 10. 10 was the trade, 10 holding, because you also have the pivot point here. Like I said, the opening range. Here it hit 10 or 9.9. And the idea was also to get 9.9, 9.8, hopefully a little bit of a flash dip. Really nice reloads, and you can see on this chart as well that the volumes were coming off, a nice taper off. Now the idea behind this for a second wave, so we got one wave, pullback, pivot point. And then the idea is for it to pop to the upside on bigger volumes. Really, really basic entry-level stuff. But instead, it sold pretty heavily. So a big volume came in, quite a bit. I think 400k or 450k stacked on the bid. Sorry, it might have been 550 and 400 got wiped. And then it was just about, just get rid of it. For me, it was just get rid of it, because we've got rising volumes into selling. And this has been reloading really nicely on small volumes, but decent chunks, little bits at a time. And then you suddenly have this big 400k seller come in, and then it just takes it out. So what you end up with is just this tank to 9 cents, and thankfully got out between 10 and 9.8. The plan was to get out at 9.6 roughly, but obviously when there's no point waiting for 9.6 if I know this thing's going to tank, because massive selling's just arrived. It's about watching it quite carefully and just making sure I'm on the front foot of getting out of that stock as quickly as possible. And ended up being the right decision, obviously from 9.8, saving 8 ticks there. And then for me, that's like, okay, this stock is dead. That was the idea, is that this stock is actually dead. And instead what happens, it kind of just chills, goes sideways, goes back up, tests 9.9, hits VWAP, hits VWAP again. So we get rid of this drawing here, and what we end up seeing is, oh, okay, so we got higher lows forming while hitting VWAP. Like, okay, so we got this level, and then obviously it should be higher, like maybe 9.4, 9.5 should be the next low. Ends up being like 9.7. So again, it's just holding. Volumes are coming in. It's setting up nicely. End up with a bit of a volume move to the upside. And it's like, is that the breakout? Is that what we're seeing here? And then nothing comes off. And then the idea is obviously 9.7 to hold, because you don't want lower lows. It gets right through it to 9.4. And then it's just like, oh, this is done, right? It's like, what's left? What's left? And then it ends up breaking out, testing to 10 again. So I'll zoom out a little bit. And then it just collapses eventually. And then it comes right back again. So it doesn't quite make sense. I mean, even if you ignore that little drop there, because it was done on a little bit of volume, but even if you just include that, so you got higher low, higher low, higher low, and even higher low there, and then it breaks through that just to break above the highs. It's just like, what the fuck is going on? And then it ends up going to 11. And then I'm thinking, surely it's done a fake out to the downside. It's broken through VWAP, made higher highs now. So high, low, high, low, high, low, tiny ass fake out into higher highs, a breakout above VWAP on rising volumes, breaks to 11, and then it just fucking dies. The fuck's going on? What the fuck is going on? I actually don't know. So really it was just one failed trade here, really kept it really tight. And then I was just watching, trying to judge what's going on. Like, is there an entry here? What's my edge? I tried catching the pullback a couple of times. I think it was this level here. Or was it this level here? Maybe on both. I can't recall exactly. But the point is, I missed out by a tick on both. I tried on a couple of occasions, and it didn't work out. And that's fine, because I was probably going to break even anyway, because I would have held on for the breakout, and I would have probably got stopped out here anyway. Definitely by here, that's for sure. And yeah, you know, once it breaks out to the upside here, I'm probably expecting a retest, at worst a retest, and then a rally or a retest or consolidation or anything except fake, break, fake, dead. Like, it's just so strange. It just doesn't cross my mind that that's even possible. But spec market's been a bit unusual. And one thing I've mentioned before this trade today, one thing I pointed out on BM8, and this has happened a few times. This is probably the third time that it's happened. Let me just bring up BM8. So BM8 was a news announcement. I can't even remember what the announcement was. It was probably lithium related. But we end up with a trade that goes on open at 30. So this is the opening price. It opens, dips 35.5, pumps to 37 on good volume. So opening volumes are really nice. You can see on these two candles here from open. Bit of volume here as well. Breaks down. Tries to do a little bit of a bounce. I don't know. There was a level here. Jeez, I can't draw. There's a level here at 34. And it's like, okay, well, if this stock's ever going to live, it's going to be 34. And I even tweeted it out. I'm like, I'm getting this at 34. And it was like, okay, if there's ever going to be a bounce, and I thought it was good news. I thought it was healthy enough to move for a spec stock. I don't expect it to go anywhere tomorrow or the day after or whatever. This is purely intraday. It was good enough that I thought 34 is all right. Get a starter position. It flops. And then it starts coming back up. Breaks back above 34, retest the open price just to collapse again. So it was on this day, I noticed that this was a trend or a pattern that's been occurring on the spec market. And the pattern is wherever there's an obvious support level, whether it's VWAP, whether it's 10 cents in the example of OZM, which is right here. Let me just clear all these drawings. This 10 cent level, which sort of aligns with VWAP in a way. So this is the obvious level, right? This is the obvious expectation. And on BM8, 34 was the next obvious level, or the only obvious level, because it sort of fails to make any kind of interesting range. Whatever the level is, it's gonna destroy that level to the point where I think it's just dead for the day. And that's the bottom. It's so fucking stupid. But this is the fourth time it's happened. OZM is the fourth time it's happened in a row, where I'm looking at a key level. It breaks down to the point where you think it's dead, because from 34 to 32, this bounces on nothing. What is this level at 30? It's nothing, right? You look at OZM. What's this bounce at 8.8? Nothing. It's in the middle of nowhere. It's not even a double bottom, not even close to a double bottom. It's like 5 ticks away from a double bottom. There's no VWAP, there's no nothing for it to bounce off here. And yet there's a good move after it. It's the same thing with BM8. Bounces in the middle of fucking nowhere, breaks through 34 for whatever reason, retests the open price, which at that point, if you also look at VWAP, it breaks through VWAP and this pivot point here at 34. breaks through and you're like, oh, it's gonna go up, break through, retest VWAP, retest this level, and then continue. That's an idea, but instead it just fucks out and dies. It's strange trading on the spec end. But that's one thing I've noticed, and that's one thing I called out this morning, is that there's probably going to be a key support level. It's going to smash it and look dead, and then it's probably going to be a buy. So I wrote that in Discord, and lo and behold, it's exactly what happens. But then someone asked me, well, how do you make a trading plan out of that? That's a good question. There isn't one yet, because how do you pick the bottom of a stock like OZM? How do you pick the reversal here? It's in the middle of nowhere. There's no fib level. There's no, not that I'd rely on a fib level, but there's no fibs. There's no pivot points. There's no major level here. There's nothing. It's just literally middle of nowhere on pretty okay liquidity too. It's not like this is an illiquid stock. Liquidity was there. So it's kind of bouncing in the middle of nowhere. Same thing with BM8. Had okay liquidity. I mean, it sort of died down a little bit, but it reversed on good volumes. Good volumes kicked in here on the reversal when it sort of flipped. The order book changed completely and it looked really good. So I'm still trying to figure out what to do here. I'm sort of paying attention to key levels and leaving them alone for now in this spec end of the market, and I'm just not sure what to do with them yet. So I guess keep an eye on that one. I'll probably do another hindsight video next week where I'll be almost exclusively taking this idea and applying it in the next few spec trades if I can. Finding a key level on good catalyst news, waiting for it to completely die, and then find a way to get a trade in there. That's sort of something I'm planning on doing, something I'm going to at least actively think about. Depends on the quality of the news announcement as well. I mean, if something's hitting 50 grams a ton and there's 50 meters of it and it's shallow and it's gold, I'm not going to do that. I'm going to throw the house on it. But just generally speaking, a good news announcement, nothing groundbreaking, then I'll probably apply that idea. I'm just not sure. I'm probably not going to buy the dip, but I will wait for the reversal or show signs of health in the order book for a reversal, and I'll probably take that trade. But these are just thoughts, right? I'm not committing to absolutely doing this. It's just a thought in my head, and that thought is going to translate to next week's trades. And we'll see if we can take these thoughts and apply it into something profitable. So I'll, at the very least, I'll update you guys next week about that. So if you found any of this useful, please hit the like, subscribe, and all that good shit, and I'll catch you next week.